Are you still losing trades? It happens not because your setup is wrong, because you don't understand the market structure and how smart money works. Today, we are breaking down the foundation of profitable trading. Whatever you are trading, stocks, crypto, or forex, this is absolutely no difference at all. In the next 5 minutes, you will learn how to read the market structure like a pro. Today, I will explain you the basis of the forex and the importance of the market structure. So first of all, forex is the most liquid market in the world, and daily volume is a $6.6 trillion. It's pretty much more than in crypto market, believe me. The foreign exchange refers to the buying and selling of the currencies in the correspondence to another, and the main factor which move any market is the orders of supply and demand zone. So from supply zone we selling, from demand zone we buying, because we follow for smart money. What smart money concept means? It's a big players who control the market. Smart money is the money from powerful groups like banks and hedge funds. They trade huge amount of lots, which led them to move prices. Retail traders like we can't complete. We have to follow, don't fight with them. We should track where smart money goes. This is the massive trades, lift pattern and prices, hitting where the market might go to next. And imagine banks handle over 60% of these trades. They have expert teams, insider info, and make trades so big and leave traces in the market. How to find these traces, I will explain you in the next video. First of all, market structure helps us to determine who is controlling the market right now, buyers or sellers, and where price may to move next. So we need to identify our supply and demand zone. Market consists of three main phases. It's downtrend, range, and uptrend. In downtrend, price creates lower lows and lower highs. This is lower low, lower high, lower low, lower high, lower low, lower high. Why? Because, for example, this low is lower than previous one, and this high is lower than this. I hope it's simple to understand, right? In a range, we don't have clear winner, price just bounces between support and resistance. This is our support zone, this is our resistance zone, and range is a pretty big theme. I will explain you also in the next video. In uptrend, price printed higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. What it means? This low is higher than this, and this high is higher than this. So we need to find our demand zone here, because price goes to, normally it must be impulse correction, and here will be our demand zone, and here we can buy. This is the real example of downtrend. As you can see, price printed lower low, lower high, lower low, lower high, lower low, lower high, lower low. Here, as you can see, good example. We have here order block, we have impulse and correction. Price goes to correction to mitigate this order block, and bam, we have one more impulse. Also, this is live example like range. We have impulse, correction. How to identify the range? Through the volume. It's a 1 month chart. Here, after big impulse, price goes to correction, and this will be exactly our range. This will be our support zone, this will be our resistance zone. And what we can see inside of this range, after this impulse, price make correction, lift liquidity. We have two deviations here and here. We have liquidity sweep here, new deviation, entry in the range, exit on the range, we created two equal highs, then bam, we have again liquidity sweep, we have new deviation, we have one more liquidity sweep. And what we can expect it or exit from the range, or price goes to sweep this liquidity. So like I said before, I will explain you more about range in the next video. In uptrend we have the same: higher low, higher high, higher low, higher high, higher low, higher high. Here, for example, it's a good example when price make, for example, higher high, higher low, impulse, correction, and we created new higher high. So now you know that you have to follow the trend, because trend is your friend. And if this video helps to you, give the like, drop the comment, and subscribe for more tricks. Use stop loss and have a profitable day.